Hello and welcome to our daily Forex market review. I'm Derek Schimming, and today I want to talk about what may be taking place in the market, at least our perception or my perception at this point. I think we're getting a little bit toppy on the yen pairs, and at least they look to be transitioning. And so I'm kind of wanting you to err on the side of caution. And let me show you what I'm talking about. We have the FOMC statement coming out later today, so obviously the market is trading somewhat muted in front of the report. You also have non-farm payroll on Friday, so we kind of get a double hit this week. I would expect some volatility this afternoon when the FOM statement is released, but then that might quickly be subdued because then the emphasis will be on non-farm payroll as well. And because of that, you can see that the dollar is trading very, very flat today. It's been fairly flat this week. I would even argue fairly flat this year so far, and it's been the yen that's been the charger. Looking at the CCYX, again, reminding you this is disassembling all of the currency pairs, looking at and isolating the individual currencies, giving you the opportunity to identify which currencies are strong, which currencies are weak, and which currencies are not trending at all. This is based on the largest liquidity pool in the Forex marketplace globally, which is also something that trading off of my charts you can execute and take from. So not only do we take statistics from this global liquidity pool, but we actually trade into it as well, which is an awesome opportunity for you using a direct ECN connection. You're not doing what this is not looking at the trades from one broker because every broker is a third market. This is looking at a much more broad-based global analysis of what's happening in the marketplace, and that's one of the reasons that our CCYX is such a substantial tool. So you can see the green, that's the dollar. The dollar is in green, and it is going just sideways across the chart today. And this is looking back just after rollover yesterday. This is looking at from rollover forward each day. So we can see that the dollar is relatively flat. The pound is also, pound in pink here, the pound going across the middle with the dollar. The pound is relatively flat as well. Not what I call a desirable situation. Now, it's the extremes we're looking for. As a trader, the CCYX should be your starting point. When you sit down, you log onto your software, it should be what is moving up, what is moving down, and what's not moving. And you can see if you go to the start of the London market session right in here, and I'll try to post that on 0, put the crosshair right here. You can see that from London forward, the euro, displayed here in red, has been trending upward since the markets opened in London. You also have the Swiss. Took a little bit longer for the Swissy to get involved, but obviously the Swiss has been trending to the upside as well. Of course, it's pegged, so there's a little bit of correlation there between the euro and the Swiss at all times currently. But the Swiss is now outpacing the euro, which is interesting to note. To the downside, look what you see going to the downside, the two currencies that are moving down. It's really three. If you pay close attention, you'll see that three of them have actually been fairly consistent since the London market opened. The obvious is the yen in light blue down here at the bottom of the display, and also the New Zealand. Not a big fan of trading the New Zealand pairs, largely in fact just based on average trading range and opportunities, but the New Zealand is also trading down. But that should be your hint to the third currency that's also been trading down since the London Open, and that is the New Zealand, displayed here in orange. And you can see that I think I said New Zealand again, but the Aussie has been trading down since the London Open. It's flattening out now, but again, I think all the currencies, if I was to take this to a more detailed view, you would see that all the currencies have pretty much flattened out. But which ones were quickest to do that? Which ones were flattening early? Of course, the dollar and the pound, because they really weren't moving too much. But you can see that the Aussie looks flatlined. The CAD here in yellow looks flatlined. The yen has flattened out, although it's moved off of its lows. And you can't say it's trending up. It's just not moving down right now. The euro looks like it's starting to flatten out. Really, the only currency that looks like it still has some momentum to it is the Swiss, for whatever reason. So the other thing that I want you to pay attention to here, and what is always an alert to us, number one, when we look at the CCYX, we want consistent separation. We want divergence and or convergence. We don't want a sloppy chart. You won't want currencies moving up and down all of this chart. When it starts looking a mess, that also means the market's kind of a mess. So consistent separation, divergence or convergence of the currencies from towards each other or away from each other is ideal. We have that. Be it, I always say it looks like your hand. If you put your hand out, some of your fingers are angling down, some of your fingers are angling up, and that's what we want to see on here, a comb or a consistent separation. The other concern I have is typically your correlated currencies are the dollar and the yen. They are correlated 90% of the time, and the euro and the pound, and they're correlated most of the time. What do you see today? I've got the yen moving down, the dollar not. I have the euro moving up and the pound not. So it always makes me think, who's wrong? Now this isn't necessarily which one is wrong in the fact it just once again suggests the dollar and the pound are not moving. But again, it's always more ideal when pound and yen have correlation. It's always more ideal when the euro and the pound have correlation. Gives us a lot better opportunities. So that's the first view. And knowing that we probably want to be focusing on the yen pairs today, and specifically, it's probably the euro yen and the Swiss yen. I'm holding Swiss yen open long right now because of this display and because of the pattern. Now let me show you my concern, and I think the yen pairs have been the play so far this year. They've been better opportunities more times than not. But let's take a look at a couple of these a little bit more detailed. Here's the euro yen stepping back, looking at this last several days, last week and so far this week basically. You see the pivots on there on the yens. The pivots have obviously been supportive and resistive in the marketplace. So you definitely have to keep your eye on the pivot levels when you're approaching them on the yen pairs. They are definitely providing support and resistance when the pair is crossing. We have seen very little transactions where the pair is just ripping through the pivots. They've been very respectful of them. The only time you're going to see when the trading ranges diminish on the day, such as if we go to this third day displayed right here, you can see that the pivot range is tightened up because the prior day the trading range was very, very low. When the tighter the pivot ranges are, the more likely it is to get through them. Then on this day, this was Thursday and Friday of last week. Thursday and Friday were monstrous days on the yen pairs. You definitely should have been making money on the yen pairs. I know that we did, and you should have too, and you probably did if you played them. But then they got overheated. They extended this on Thursday. The move was big, so what happens on Friday? The pivot levels extend, and then they become more substantial. You can see when it ran up here to R2. Of course, it was also Friday, end of the day, but it really ran out of steam when it got up to R2. You can see on Monday the pivot was support. You can see on Tuesday the pivot in S1 was support and resistance right here. So that's a very important thing to note. But my concern is, it looks like we've maybe broken trend. If I was to place a trend line, now I use the zone. There's a zone. My zone configuration is on this chart, and to me that's a floating trend line. It's not perfectly straight, but you learn to read this, and it provides a support and resistance, and the zone is an ideal way to look at the pair when it comes into the zone. I know when it's lifted out of the zone, it's made a move. I know when it comes into the zone, potentially there may be a trade setting up, and if it violates the zone, then I've been warned. So in this case, you can see how it has broken trend where we're setting higher highs and lows, and we failed to do that on Monday and Tuesday of this week. However, it blew through that today, and there is where my concern lies, because we've broken the uptrend, and now it seems as if, and if you we'll blow this little corner piece up, because today's activity has got to be a concern for you. It's the start of what potentially is a 1, 2, 3 pattern. Now that means the pair's in transition, and when we have a pair in transition, that's a collision of buyers and sellers. Some of you traders think it's long, some of you traders think it's short. That's what creates support and resistance. That's what creates tops and bottoms in the marketplace. The yen pairs have been moving 2 and 3 days at a time in one direction. About 2.5 days in one direction, basically. And what have we done? We moved up 2 days. Now we've moved down slightly, kind of a sideways consolidation for a couple of days, and it's made this burst up, and it looks to me like it's gotten a little overheated, or potentially has. You know, it can't go long, can't go short. I need to see something happen, and we'll go to a little bit greater detail to identify that. You can also see from a broad picture based on, look at the TFXD oscillator at the bottom. When we look at Thursday's levels and Friday's levels, and we look at today's levels, now we have divergence because we do have a pair setting new highs, but yet the oscillator has not been able to achieve that. So that is also an indication of divergence, another reason to be cautious. So let's minimize this, and now let's blow this up and go to a little bit more detailed view of the euro yen. And I've taken the liberty to marking a couple things on this chart where I do have what I think may be the 1, 2, 3 pattern that has set up on the day. Now I've also marked the resistance range, or what potentially is the resistance range, and for those of you who see this as a long trade, you got to be concerned about it approaching the upper 123 range. You can see the top of this on the scale over here. You can see 123.90, and that is basically the top of this move right here. We saw the pair as it got up in that up to the upper 90 range, or into the 90, right at the 90 range. So I see a 1, 2, 3 pattern. I see a potential, if you look at the current movement here, 1, 2, 3. And look at the oscillator. Look how it was failed to continue or to move up with the pair price moving back up to the high. Again, I've got a 1, 2, 3. I have a consolidation up just below 124, a little bit below 124. We're in the 123.50 range right now. It's failed to set a new high today, although it's still setting higher lows. The buyers are still in there, but some sellers are overhead, and they keep hitting it when it moves up into the 70, 80 range. We're seeing them not even to the 70 range or 80 range, but we're seeing it running into selling activity when it gets up there, and that has prevented it from setting a new high. So, if nothing else, proceed with caution. Caution would be the name of the game, and when we see a topping pattern, when we see a 1, 2, 3 identify itself, when we have divergence, it's not a guarantee that the up move is over, but it is a strong indication that what has been happening may be done. And so as we look at the market here, we may in fact be setting up for a turn back down. Now the reason that's important to identify, not only for trades you're making right now to avoid a problem, but it's also because if the pair has been moving at 2 and 3 days at a time in one direction, even when it consolidates, it's moving up 2 or 3 days, moving down to it. When it's moving up for 2 or 3 days. When it's moving sideways, it's moving for a couple of days. When it's moving down, it's moving for a couple of days. We've had that consistent since the start of the year with good trading ranges. So we moved up for a couple days. Thursday and Friday were strong. Monday and Tuesday were fairly sideways. Today we've given this last little burst a climactic move to the upside that has been met with divergence. So with the reason it's so important to be aware of this and to be cautious today and maybe going into tomorrow, the FOMC, the non-farm, all the things we talked about, but also, if this is the top of the move, then I want to be in there. I want to know and be aware of this and not see this 2 days later and say, oh my gosh, I should have shorted that. As we talked about yesterday, hindsight's always 20/20. As traders, we have to be looking at the market and trying to anticipate, identify what's setting up, and anticipate it. And then we react to reality. Your job is not to predict and forecast. Save that for the analysts. They have to put a prediction out there. As traders, you can't predict. You recognize and react to reality. And I know that sounds simple, but the problem is too many of you are too darn busy trying to predict and forecast that sometimes you don't even notice what's happening. And so what I'm telling you is this is an opportunity for you to be aware and be alert and be looking for what potentially is the start of a 1 or 2 or a 3 day downtrend. We may see the yen pairs trading down for the balance of the week. How will we know that? What if it takes out this low? What if it comes down and takes out the bottom of this 1, 2, 3 pattern? Now that would be currently at today's R1, but that's not going to be R1 tomorrow when it may do this. It may happen after rollover today. So I'm just pointing out that's where R1 is right now, which is at 122.88. but you breaking two. So trading to point number 2 and then trading beyond point number 2, and both of those would be entry opportunities if and when we see that. Also, the other side of that is, what if it breaks to a new high? What if it gets up to the 124 and breaks above it? Well, what was resistance needs to be support. So ideally, to avoid a false breakout, you don't take the break, you take the test of the break. You allow it to move. They don't just go straight up or straight down. Allow it to move, allow it to pull back, and if the resistance range or the support, in this case the resistance range, holds and becomes support, then that test, what we call the test of the break, becomes one of the most ideal entries you can find in the market. And by waiting for the test and not taking the break, that's how you avoid a false breakout. How many times have you taken what you thought was a breakout only to have it drop back into the range, like, oh my gosh, what have I done? Because you were too eager to get into that breakout move and you didn't wait for the ideal entry. So you take it, if you take the break, it's a dice roll. You're throwing, you got a 50-50 chance, and I always joke, if you're going to throw the dice, you might as well go to Vegas and get some free drinks, because I'm not throwing my money away on the break. But if the break proves and it holds, that test move, you go from taking a gamble to finding one of the most high probable setups that you can find in the market. I teach a class specifically on properly trading breakouts and breakdowns. Love to share it with you. Now let's look at the pound yen, because again, I think the pound yen and the euro yen have been the best trading opportunities in the market so far this year. They are the only two that have average trading range over 200 pips, and I like activity, and obviously to make money we need trading range. So here is, now this is looking at a 3-line break chart. This is a little bit different view, sharing a little bit different consolidated view for you. The 3-line break becomes a very efficient, we call it a trend and exit tool. And I brought that up because it cleans up, this is just a naked chart, and I put one trend line on it. So that's looking back to November, mid-November? No, actually, I'm into October if you go to the far right of this, or far left of this chart. But where the bottom of the trend line is mid-November. So what I'm showing you here is, and we talked about this earlier in the week, the pound yen has been on a massive move. But now that we've gotten into January, now that we've gotten into the new year, it's been volatile, but it hasn't found its direction yet. So you can see, if we're taking that from the low set back in mid-November, it's broken trend. And then, without me putting anything on here, look at the resistance range. You should be able to very clearly, without me marking it, doesn't take rocket science to see that there is a topping range here. You can also see the consolidated range. So if I bring my cursor and just take it across here slowly, this is resistance, resistance here, resistance here, and resistance here. Resistance is never a specific price. It's a specific range, and those are all inside that range. Look at the support. We had support here when it was moving up, one of the higher lows. This was still a higher low. This went a little bit lower, but what did we have? We talked about this earlier, is the 1, 2, 3 pattern. Again, the 1, 2, 3s with divergence have been your best opportunity this year. You should be desiring and looking to identify 1, 2, 3 patterns in the market, both 1, 2, 3 tops and 1, 2, 3 bottoms. A 1, 2, 3 is just a double top or a double bottom. The difference is, when I have a 1, 2, 3 bottom, the buyers came in at a higher price than the prior low. It's better than a double bottom because I know that buyers are there at a higher level. When I have a 1, 2, 3 top, just like a double top, it is a double top. But it's a double top that's showing you that the selling activity came in at a lower price and winning the war, if you will, because that's what it is, a collision of buyers and sellers. So we had the 1, 2, 3 pattern. Look at the trade down that came from that. We've moved back up. I think we're at resistance. I really do. And that's at least what I'm anticipating. Am I taking a short trade here blindly because I think this is at a top? No, I'm anticipating that we're topped out, and I'm prepared to take the short trade. What's a long trade here? Well, if I get over the 144.60, 144.70 range, if I take out those highs, same thing. It becomes a breakout opportunity. It has to break the resistance that's clearly been set since January, since the year began. So unless this pair can get over that, I can't feel too comfortable about the longs unless we see some kind of pullback. So I'm anticipating that there is some type of pullback in the works. Now let's look at this on a little bit tighter view. And again, on this pair, on this view, I've taken the liberty to mark a couple of things. Now I told you I use my zone configuration. I don't typically use trend lines. Sometimes I put a trend line on to show you something specific. So to me, my zone is a floating trend line. And again, I teach a class specifically on how to use my trading zones, because when the pair is inside that zone, you know that's the sweet spot. It's telling me that it's pulled back enough to be worthy of my consideration for a trade, but not too much that I need to be afraid of it. Or it's rallied up. If we're in a downtrend, it's rallied up back into the zone, back into the sweet spot, worthy of my consideration, not too much that I have to be afraid of it. And that's why the zone is there. It does create a support range. I am looking at the support, and for me it is a floating trend line. So unless I'm teaching, I usually don't use trend lines myself. But here is a trend line on the pair. I'm showing this to you because the reason I want you to see this, if we're taking this back, and this is just looking at 2 days, this is looking at the last 2 days, coming out of consolidation. Clearly I have the 1, 2, 3 pattern mark, which does concern me. That's my alert. Same thing as the euro. Here's our high move at point 1. Here's our high move at point 2. Sellers came in at a little bit lower rate than before. Look at the divergence that's set up in the oscillator. Again, I don't think I should have to mark this. It's pretty obvious that it failed to show the same type or same level of interest from traders as it did when it made the first move. I think we've seen a climactic event. I'm a little bit concerned on whether this thing can have any more legs, and traders that are looking to take this long, I'm very cautious about that. I think it needs to trade higher and prove that it can go higher in order to take the trade. And more than likely, in my opinion, I think this thing's setting up to go down. And again, the yen pairs have been moving 2 and 3 days at a time. So the reason I want to be on guard for this, not only for the current trade, not only do I need to be concerned about the FOMC statement coming out today that is obviously slowing down the market. Institutional traders and firm traders are excuse driven. They're looking for reasons to not do anything except match up your trades. They don't have to take risks. They can sit there and make money just handling what you're doing. So they're looking at the days when they don't have to do anything in the firm account. So here we look at this and they say, hey, FOMC and non-farm payroll, I don't have to do anything today. So the pair is going to trade very muted when we come into the more substantial volume that we look for to drive big trades. So we're not going to have that today, more than likely. We're going to get a little bit of activity later on, but that's going to largely, in fact, be individuals trading this thing. And when you look at it, it's got a 1, 2, 3 pattern. It has divergence. It's at a resistance range, and we just look back. We saw the resistance that it's at, and it is staying just below R2 right now. So what am I looking for? If it can get above R2 and get above the high trades on the day, then that might change the pattern, might change my opinion. But until it does something like that, then I'm on guard and I'm anticipating the potential for a short trade. The pound is not really playing today. I showed you that on the CCYX. It's very, very sideways. So right now is not your opportunity to take a long or a short trade on pound yen. But I do think it's an opportunity to anticipate it, because if we can catch it early, we might be able to find ourselves at the top of a nice downward move. And that's what it's all about. Remember, you just don't, when we go to look at the marketplace, I'm not trying to pick tops or bottoms. As a matter of fact, traders that tell you they're at the top or in at the bottom, they're probably not telling you the truth. It's increasingly difficult. And when we're at the transitional state, which is where we're at right now, arguably, well, the transitions are by far the most difficult. Again, it is a collision of buyers and sellers, and who's going to win this game? So when we're looking at the market that may be topping or bottoming out, topping in this case, then that's when we need to act with more caution. Maybe take a little bit less. Maybe expect, what's the easiest thing to do when you're uncertain? You can either not trade at all, sit on your hands. Sometimes a great trade is not making one at all. You don't have to be in a trade. That's a misnomer. Most traders think they always have to be in something, and sometimes the best trade is no trade at all. Or you can reduce your trade size. You can minimize and reduce the risk by not trading the typical size that you would trade. Cut your trade in half. Take a third off the trade. Something. Reduce your trade size. Because of the lots and the way we can trade the spot Forex market, it's an ideal opportunity to be able to reduce your trade size, and you should do it from time to time. When you're uncertain but still want to make the trade, or if you're coming out of a slump, you have a couple bad trades in a row, the best thing to do is reduce your trade size and get yourself back on the horse. The last thing is to reduce your expectations, and that's also very, very easy. So I want to be able to say, hey, I want to make a gain here. I want to take a positive trade, but I don't have to shoot for the moon today. Let me book something positive. Let me build my confidence. Let me make some money. Let me learn a little bit more about the market. And let me move forward, because a small gain tells me that I get to live to trade another day. So that's it. That's what I want you to be aware of. Let's keep our eyes out, and we'll talk about this tomorrow. We'll see how the FOMC statement affects us. I have a feeling more than likely Thursday will be a very muted day because of the non-farm payroll. Non-farm payroll release is always a lot of fun in the room. When you're using the right tools and you know how to approach news events properly, they can be very entertaining and profitable. And so we'll be looking at both tomorrow's day. I think it might be a little bit boring, but we'll see. And then Friday may be exciting. We'll see. Maybe, maybe not. But based on the year so far, I'm very excited about this non-farm payroll event. If you have any questions, you'd like to trade with us, we'd love to have you come on the floor and experience this firsthand. Just send me an email. Go to the top of the YouTube page. You can see the email address. It's just send it to me personally. It's DerekSchimming@gmail.com. That's my personal email address. And if you want to, here in the next couple weeks, I'm going to publish my personal phone number and give you the opportunity to speak to me on the phone and one-on-one and get to know each other a little bit better, and send you an invitation to be able to come into the trade room and trade with me. So send an email to DerekSchimming@gmail.com. My name is Derek Schimming. You guys have a great day trading.